Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the small caps that were in play today. Okay, let's take a look at CRMD, closed up 22% today. Super nice move. It has a good steady uptrend going here on the daily chart. You can see the middle Bollinger Band and the 50-day simple moving average are holding. As long as this 125 to 129 support level holds, this uptrend should continue. Notice the nice volume spike down here, so it had some good volume. Yeah, the gap filled over here. There was a gap between these two candles, and you can see that filled today. The key is going to be to stay above the top of that gap. If it can stay above 160, you're looking at 185 as the next resistance zone, and then you have up here 225, which was the high close from back here in October. That would be the eventual target. You'd be looking for the jar to fill if support holds and resistance breaks. Keep in mind it did bust through that upper Bollinger Band today. You know, if it pulls back, what you really want to see is EMA 4 at 146 hold. You want to see it hold to signal the chart is strong and wants to keep pushing higher. Okay, so take a look at NFEC here. This is from back here on the 14th. Yeah, it had this nice close above the middle Bollinger Band. We put out an alert in the premium chat, and then as you can see here, it's been running every day since. This was the alert day, and it's just been on this nice uptrend ever since. You can see EMA 4 here at 1218 has been holding. You know, it closed below one day, but EMA 8 held. You know, as long as it's riding EMA 4, it's pushing super strong, and it signals to keep riding. Once it closes below, it could drop down to that EMA 8 level. It did close above the upper Bollinger Band today, and it is on a 4-day run, so you have to be on the lookout for it taking a little breather here. Also, you have RSI up here at 79, so it's hitting frothy levels, and as you can see, you know, it's above levels where it's topped out at the past, and then also FASTO's at 96. And so when a stock is really pushing on the daily chart, it's good to look at the weekly chart to find, or the monthly chart to find the next resistance levels. In this case, I had to use the monthly chart because I went way back. Notice the monthly chart has a 95 RSI. That's super frothy, and it also has FASTO at 97. So this is signaling that it is overbought on multiple time frames, and so that when that happens, you have to be on the lookout for it taking a breather. Check out this chart here. It's been filling the jar. You can see way back here it was trading at much higher levels. I'm sure they had a reverse split or something. Yeah, you can see here in 2009 it hit this high right here at 14, and so it's trying to break above that level. So if you see it drop below 14, that could be a red flag that it's cooling down, and then it could pull back to test EMA 4 at 998. Notice how this pink line has been holding ever since there was a close above back here, and this is a monthly chart. So each candle represents one whole month of trading. So you can see it's been on this beautiful uptrend for multiple months, and so as long as that EMA 4 keeps holding, it's going to signal more upside. But notice how this candle is floating above the upper Bollinger Band. There is a space in between, so that does signal if it fails to break this level, it could possibly pull back and cool down. Now, if it turns 14 into support, that would be really bullish, and you could see it run up to these higher levels. You have this right here around 18 or so from some resistance here, and then you'd be talking about higher levels after that. Yeah, this is doing what we call filling the jar. You know, so it's you know, it had this higher levels. It formed a sideways, you know, consolidated, and now it's heading back up. But this could be a temporary climax now that it hit that 14 level. Okay, let's look at MARK. All right, so yeah, this stock had a nice day today, closed up 31%. It is a thinly traded stock. This is a bounce play, and it came down and it closed above EMAs 4, 8, and 13. As long as the EMA 4 at 155 holds, it should continue bouncing. If it dropped below that, that would signal downside risk. It will be a red flag if it drops below EMA 13 at 171. The next key level to break now is this bottom of the gap. Okay, there's a space between the low of day on this candle and high of day on this candle. There was a big gap down open, and so this 209 to 217 level will be the key level to break. This is the middle Bollinger Band, which is also the 20-day simple moving average. If it comes up there, fails to break that level, that would signal a temporary top. If it closed above, it could head higher and test that 50-day simple moving average at 246. Okay, let's look at TST here. This is thestreet.com. This is Kramer's company here, and it did close up 35% today. This was a huge move. It's in that 50 to 70 bull zone. It did form an indecision candle today. You could see it was way down here at the 400-day simple moving average down here at 151. It had a giant gap up open above all these moving averages. It ran all the way up here to this key resistance zone. You can see this was resistance in September and October, and then it pulled back into the bands. It was way above the upper Bollinger Band. It also closed below the 100-day simple moving average at 207. This is the gold line here. That's going to be a key level to break. Also this descending resistance line. And so it's going to be all about getting above 207, 210. So trading above 210, you know, that should signal upside potential. Could possibly run up to 225, 230. Fail to break this 207 100-day simple moving average resistance level, and it could come back and test this 50 and 200-day simple moving averages at 195 and 194. Keep in mind there is a big gap between low of day today at 190 and high of day yesterday or Tuesday way down there in the 150s. Okay, let's look at OZM. That was a huge volume spike, huh? But it looks like with the candle there, they were definitely unloading some shares. Let's look at OZM here. OZM is in the bull zone as well. Closed up 25%, so that was a nice move for this probably not very well-known stock. It had a bullish crossover here on ADX. The chart is heating up. There is a red flag. There's a gap between high of day yesterday and low of day today. So if it pulled back here to 105 to test the middle Bollinger Band, the dotted purple line, that would fill the gap. What you want to see now is a break above the 50-day simple moving average at 1235. If it trades above that level tomorrow or next week, that should signal more upside potential. If it hits that level and fails to break, it could come down there and fill the gap. As long as this middle Bollinger Band down here at 105 turns into support, a new uptrend could begin. Okay, let's look at RGSE. Closed up 16% today. Nice move. Bounced right off of the 50 zone. You know, it was way up here, overbought on RSI, and it came down, bounced right off of 50 and remained bullish. You have a bullish crossover here on FASTO. So you know, you have an uptick on Plus DI. So it was a nice bounce after a multi-day pullback. You could see here there were 6 red candles in a row. You know, it topped out up here in the 80s. Pulled all the way back, and then it formed this hammer. Look at the hammer here. A hammer formed during a pullback many times signals a bounce, especially when the hammer is formed right on the middle Bollinger Band, right off of a key support level. It has to hold this 55 level in order to keep the uptrend going. If it were to drop below that level, it would signal downside risk. You know, it could come down here to that 50-day simple moving average. Now it's back above the EMAs 4, 8, and 13. It needs to stay above these moving averages here. You know, it needs to stay above 60, 61. And then what you want to see is, you know, tomorrow is this 200-day simple moving average tested at 69. If it can close above that level and turn it into support, that should signal more upside potential. Keep in mind, they did just meet today and pass some bill, legislation, I don't know what you want to call it, but in California, it's going to be mandated, or whoever the solar committee is for California, it's going to be for any new home construction with just a couple of minor limitations. Maybe if you have a big tree in the way, a shadow, or your roof isn't big enough, every new house is going to have solar panels. So the solar sector is going to be rocking, so keep an eye on it. It has already been in play. I've been posting videos on that sector. Let's look at DTRM here. Closed up 21%. So you have FASTO at 56. This is a thinly traded stock. I like this. You know, it had some volume here, and it's holding support. The upper wicks do show dilution. Keep an eye on it. If it can stay above 54, it needs to stay above the 50-day simple moving average. It could come back up here and try to break this 78 level. If it gets a close above the 100-day simple moving average, that would signal more upside potential. Now, if it drops below 53 and down below the middle Bollinger Band at 50, has a close below those levels, that would signal downside risk. It has to hold those levels to be in play here. But the volume is signaling that some people might have loaded. They're definitely, you know, dumping some shares, you know, more than likely. But yeah, well, just keep an eye on it if you're a penny stock trader. Okay, take a look at MRNS, closed up 17% here. Yeah, and so with RSI, you know, whenever I'm showing you RSI and it just breaks above 50 and it's still in the 50s, it shows it has room to run until that 70 overbought level. You can see the stock ran way up here into the 80s on a prior run. Yeah, you're looking here at trying to put the, you know, turn the middle Bollinger Band into support. If it can stay stay above 464, it could get a new uptrend going. It closed above this black line here, which is the 400-day simple moving average at 520. You want to see it stay above that level. It's hitting this high close horizontal resistance zone, so this is going to be a big level to break right up here in the 540s. If it can get above this level, it could run up here into where you have a convergence of these moving averages. You can see all the moving averages are lined up here, and so it's going to be about breaking that 580 resistance zone. So basically 540, 580, two levels to break above, needs to stay above 460. Okay, let's look at PHIO. All right, so this was a ticker symbol name change stock. Gosh, now I'm forgetting what the prior ticker symbol was, but SEII. No, that's SEI right here. But they just did a recent name change, and they closed up 11% today. Keep an eye on it. It closed today above the middle Bollinger Band here at 35, and so that's what we're looking for. We're on the stock the last time it got above the middle Bollinger Band, but that level failed to hold in the beginning of November, and it pulled back. And so it's in the video here because it got back above that level. If that level holds, if it can stay above 35, it could possibly work its way up to that 50-day simple moving average at 48. Notice how that level is lined up with the top of this channel here, and so that's going to be a big resistance level to break. It did have a volume spike, and then it did have this recent PSAR bull flip. So the chart is all heating up again. It just has to follow through. And you have what you want to see here in RSI. Keep an eye on it. If it breaks above 50, that would be bullish. Okay, take a look at HMNY. Yeah, I'm gonna put this one in the video. I probably shouldn't, but I'm going to. It still has some volume here. If you're a penny stock trader, it's not super liquid like it was back in the past, where it was trading hundreds of millions of shares. But what it's working on right here, and if you're trading HMNY and you're wondering, is it ever going to run? Well, watch this green line right here. This green line is the 50-day simple moving average at 0.018 currently, and so if it can close above 0.018, that should be the signal that they're thinking about running this thing, because notice how it keeps hitting this level starting on this day, and it keeps failing to close above. These black candles are where it opens above the 50-day simple moving average and they pull it back below, and so they did that again today. And so notice how tight the channel is. Look at the last several candles. They're in a very, very tight trading range with a very, very low volume, and many times you see that right before a move higher. You'll see, this is signal that the sellers have tired. Look how low that volume was right there. Everybody's lost interest in this. The sellers have tired. You just need some buyers now and a break above resistance to get a rally going. Not saying this is a good stock or anything. It's just, with penny stocks, what we say, there's no bad stocks. There's only bad entry and exit points. And so if it runs, it's going to be tradable. And so, but it's just going to be a trade. So keep that in mind. You don't want to get caught holding the bag. If it can break above 18 and then 2 cents, a break above 2, and it could really get running. You have these higher levels up here. That high in October, was way up here above 3 cents. But, check out the Bollinger Bands. Look how tight they are. The upper Bollinger Band is this purple line, and this is the lower Bollinger Band. And when they get really tight like that, it's like shaking a champagne bottle, and it's likely to have an explosive move in either direction at some point. And so a break above the upper Bollinger Band at 18 signals upside potential, and if it were to drop below 15, that's going to signal downside risk. Okay, let's look at CVRS. Yeah, this is another, I got a bunch of thinly traded stocks in this video, but keep an eye on this one. I put it in here because, if it breaks above 32, it could possibly run up here to 142, maybe up here to 150, into this zone over here. The high close to break is this 142.50 resistance zone. And so, yeah, you could get a 10% gain from here if it, 10-15% gain if it can break above above that 132 level. You can see it broke above the descending resistance line. You know, this was a resistance here, and then today it closed above. It also closed back above the middle Bollinger Band and the 50-day simple moving average at 125. And so if it can stay above 125, break 132, it might run up to the 140s, 150 level. Okay, let's look at SEII here. This is the final stock in this video. Closed up 35% today. It's a thinly traded stock. This is your dead cat bounce play here. Came down here. Notice the volume spike on Monday. So there's some bottom feeders, and then today it closed above. Let's see, was there a previous pattern? It doesn't look like it. I think that might be a gap down there. I can't tell if that's a gap in between there. So if it didn't form bullish 3 gap downs already, and then today confirmed it, yeah, then let's see here. Yeah, that's such a tight trading range. Yeah, it looks like that opened right at the, yeah. So anyways, I mean, this is an engulfing candle. This is a bullish engulfing candle here, and so you know, that's a strong bounce candle. It didn't happen on very big volume. You could see the very light volume here, but there was the big volume spike here on the first, so people might have loaded. And so basically what you want to see is a break above the bottom of this gap and above EMA 4. If this thing starts trading above 98, it could possibly run up here and fill the gap and hit this EMA 8 at 128 and the top of the gap here around 135, 137 or so. Keep in mind, many times an upward gap fill will be a climax event. Would have to break above that level to head higher. If it ran up to that level and then stalled out, that would signal a temporary top lock in gains. Keep in mind, being long anything that's closing below EMA 4 on the daily chart makes it a very big risk to hold overnight. All right, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. All right, thank you.